Hi there, welcome to Kneppy Invest, and welcome to another answer and reply video. It is Saturday, March 22, 2025. Current time is 9:50 a.m., which actually means I can't use ComSec in this video because it is down for maintenance for the next 2 hours. I don't know why they don't do this during the night. Other websites and platforms do this, but for some reason ComSec loves to do their maintenance on a Saturday morning for about 4 hours. But, you know, they can do whatever they want. But I don't have to use ComSec in these videos, but it's a nice little platform to use on occasion, but I don't need to use it anyway, so I can record this video. Okay, so what I've done is I've gone through all your comments and questions over the past week, and I have picked out 14, not necessarily at random. I have chosen these 14, and I have filtered all these comments into the one spot. So I don't have to actually troll through all of your comments to find the ones I want to talk about. So what I've done is go back 6 days ago to Just James Dean, and Just James Dean is a lucky viewer who has actually, I will be answering replying to two of their comments or questions. So congratulations to Just James Dean, although one of Just James Dean's comments has nothing to do with investing. Well, sort of does, but not really. Anyway, philosophy, the secret of a happy life. 1, spend less than earn. Absolutely true. If you spend more than you earn, that is not a path to a happy life. In fact, that is a path to the complete opposite. I absolutely agree with that. Financial turmoil, financial stress is one of the reasons why people just don't have a happy life. I think that's an absolute given. In fact, I should do research on that. It's probably been a lot of research on that, and that is an absolute truth. The problem is we do have lack of financial education at school because the government wants us to spend as much as possible because that leads to, that's really healthy for the economy. So what's healthy for the economy may not be healthy for the individual. And that's an absolute truth. And that comes to spending. So government wants us to spend as much as possible. And so we don't get the education. If we have the education, there's a chance we're going to spend much less than we do. And that is bad for the economy. I've even heard people say, I feel guilty by investing because I feel this need to buy stuff. I've heard this. I've heard people say that. And that is sort of the guilt trip that the government puts on us because they want us to spend. Because again, GDP grows through, one of the ways it grows is through consumer spending. So spend less than earn, that's an absolute truth. Be happy with what we have and don't be envious of others. I agree with that. Another take on this is understand when you have enough. And I came to that realization when I didn't have any debt. And since then, I have been so happy. And also, being debt-free is just a massive difference. It makes a massive difference on your life. And ever since I've been debt-free, much happier. And it's really interesting because at that point in time, when I became debt-free, there was all these ads on YouTube saying, the problem you have is you can't get your hands on enough debt. And I was thinking, why would you want to be in so much debt? It just doesn't make sense. So there is that thinking you have to get into a lot of debt to make a lot of money, but why do you want to make a lot of money? You don't need to make a lot of money to be happy. So understanding when you have enough is really important. And that is sort of the same as be happy with what you have and don't be envious of others. Understanding when you have enough. The great story around that is when, what's his name? Joseph Heller and Vonnegut. I'm pretty sure I've told this story before. Both of these two writers, so Joseph Heller wrote Catch-22, Vonnegut wrote Slaughterhouse 5 or whatever, Sirens of Titan, one of my favorite novels. They went to a party hosted by a billionaire, and when the billionaire walked into the room, and by the way, this was when Joseph Heller died, Vonnegut spoke at his funeral, and he actually told this story at the funeral, so I'm just relying that Vonnegut was not telling porkies at his wake or whatever. So when the billionaire guest walked into the room, Vonnegut said to Heller, you know, the billionaire, our host, he makes more money in a day than you've made with your book Catch-22. And Heller said to Vonnegut, yeah, but I have one thing he doesn't have, and that is the knowledge that I have enough. And you just think of some of the billionaires. I'm thinking of Musk right now. I don't think Elon Musk will ever be happy. I don't think he will ever get to that point where he will be happy. So he might have a lot of money, but he will never be happy. So what's the point in life? If you can't be happy, what's the point? So that's a really good story. Understanding when you have enough. And this, I think, also comes to how much ambition you have. I think there's a lot of people out there who have a lot of ambition and they will never be happy at all. In fact, I'd say when they're on the deathbed, they're going to have a lot of regrets in life. Anyway, and the third point, Just James Dean says, don't listen to commie lies propaganda. Okay, well, yeah, well, I don't think it has to be commie lies and propaganda. It's just lies and propaganda. So the problem a lot of people have is they can't distinguish between the truth, lies, and propaganda. In fact, I got into a massive argument with a colleague of mine around exactly this. In fact, they said to me that Zelensky was the villain and Putin was the hero. Zelensky was a communist and Putin was, he was free elections, that sort of thing. And I was like, oh my god. Oh, anyway, so it's obviously, and this is the truth, that there's a lot of propaganda from Russia filtering through, and people are starting to believe a lot of the lies that come out that Putin he's a good guy and Zelensky is a bad guy. Anyway, so it's really hard for people to distinguish between lies, propaganda, and the truth. And I've seen that in just little things. Over the past, say, 10 years or so, I've seen stories pop up on Facebook like illegal immigrants get more welfare than pensioners. Absolute lie, but people believed it. Someone just wrote it on Facebook, people believed it, and all you had to do was a little bit of research to find out what that was a lie. There was another one around KFC. Kentucky Fried Chicken changed the name to KFC because they are no longer selling chicken. Well, all it took was a little bit of research to understand that was an absolute porky again. Another one was Russia banned microwaves because they're really harmful. A little bit of research showed that was an absolute lie. So people believe this. They read something, they believe it. A great example is that there's a lot of people who still believe that vaccines cause autism. This was research done in 1998. I forget his name, but he's been discredited. He got a lot of money to falsify research. The guy who said vaccines cause autism, but still people believe it, even though it's been shown to be absolutely wrong. People still believe it because they read it somewhere and they just believe it. And as soon as they believe it must be the truth. And if they hear something otherwise, no, that's wrong. The truth is actually wrong, and what I read is actually the truth. So a lot of people have a really hard time distinguishing between lies, propaganda, and the truth because there's a lot of information out there. There's actually a few replies to this. Dev Shaw says, first two sounds good advice, though wondering where does the third come in. And I think you can just leave out the comment, just say don't listen to lies, propaganda. But again, that raises up a can of worms. Simon Point PT 2000, good advice, all three of them. Just James D says, first two came from Charlie Munger. Old people do have great wisdom. Yes, Charlie Munger actually does have a few good things he does say. Third came from anyone who lived through the Cold War, anyone who lived in commie states. And from my recollection, commie lies always lead to deaths. Yes. Communism is not good. Communism is not good. And communism will never work out. And this comes back to innovation. So in a capitalist society, innovation is rewarded. In a communism state, capitalism or innovation is not rewarded. Innovation belongs to the state, so there's no incentive to innovate. In a capitalist society, there's motivation to innovate. So it comes back to innovation, and that's why, in one simple terms, communism can never work because it doesn't lead to innovation. It does the complete opposite. So it's not a good way to live, communism. I would also say capitalism is not the best model either. I do believe there is a better model that hasn't been thought of yet. Maybe I can think of that model. But anyway, so we definitely do not want to live in a communist state. And I have also seen a bit of a rise in fascism, and we don't want to live in a fascist state either. World War II was fought against fascism, And I think a lot of soldiers who died in World War II will be rolling their graves to know that fascism, I can't even say the word, is actually rising around the world now. Some people believe Donald Trump is a fascist. I wouldn't go that far, but he's definitely an authoritarian. And he's trying to get more and more power. And that is a concerning thing. When a leader is trying to get more and more power, the whole reason the United States work is because there's a lot of different levels of power over there. And he's trying to get more and more power. And that is the biggest concern I have. I just dropped my pen. I always need to have a pen in my hand because sometimes I just need to write stuff. Anyway, so thank you for that, Just James Den. By the way, I'm not a philosopher, but who knows? Fantastico, 4 days ago, says, are there Woodside Santos charts that show dividend adjusted inclusive in share price? Yes, you can do that in TradingView. So let's have a look. Don't know why I got Ansel up here. Oh, no, I know why. I was going through my technical portfolio and I finished an Ansel. Haven't gone through all of it just yet. I don't need to. I've got all weekend to do that. So let's have a look at Woodside. I suppose Woodside's had a nice dividend yield. Let's have a look. I say 4 to 5% maybe. 8.15%. Wow, I was way off on that. I'd say the dividend is pretty... I can't use Comsec for dividend. I'm trying to think of where I can get a dividend history of a company. Yeah. Anyway, I would assume Woodside's dividends are all up over the place, up and down like a yo-yo. Now, this is their normal chart, so in a downtrend. But in TradingView, all you have to do is down the bottom here, adjust data for dividends, click on that, and adjust for dividends. So if you have a look at, say, the weekly chart, you might notice a difference. If you have a look at the daily chart, you probably won't know much of a difference, but particularly with a dividend-rich company, so have a look at this weekly chart going back to 2007. The chart doesn't look that bad. Now, over the past 16 years, you've seen no return, including dividends for Woodside. But if you have a look at just the unadjusted, you'll notice a massive difference in the two charts. Yeah. So that adjusted just puts in the dividends. So you can actually see the total return. If you go to, say, FinChat, I think it's, Woodside. If you go to FinChat and on the right-hand side, go to the overview and go to the right-hand side here, this right here, you can have a look at this chart and have a look at total return, which does include dividends. So then you can have a look at the last 10 years or a max. Maybe we'll just have a look at the last 10 years. That's going back a long time, maybe 20 years. And if you just go back having a look at the last 20 years or so, actually that's not 20 years, that's even a bit more. The total return, CAGR for Woodside has been 5.9% per year since 2005. I suppose that's not bad, so that does include dividends. If you take away the dividends, it's less than that. And to take away the dividends, all you have to do is have a look at the price, I suppose. In fact, it's CAGR 1%. So very little capital return when it comes to Woodside, but you do have the dividend. So you're getting a 5% return over the past 20 years with Woodside. And I'll be honest with you, that's not a really good return. That's not the sort of return I'm looking for. And I suppose the same will be true with Santos. Let's have a look at Santos's returns over the last 20 years. Again, max, and we'll go 20 years. So this is price. In fact, CAGR is negative 2.2% on price. But if you look at total return, it's probably positive 3. No, CAGR of 1.7%. That's not really good returns for a company over the last 20 years. And if we go back to the chart for Santos, probably looking fairly similar, maybe even worse than Woodside. So that's the unadjusted chart. Share price is a bit lower than 2007 and 8. But if you have a look at the adjusted, there we go. It's almost the same price. So yeah, there we go. You can do it through TradingView. Yes. And in fact, there was probably 10 years ago, I was using this platform for charts, and I noticed that all the charts were dividend adjusted. And I just mentioned to the guy who developed the platform, I did want a non-dividend adjusted chart. And he said, why would you want to do that? So that was one of the reasons why I went away from that platform, haven't looked back, because I wanted the option to go back and forth. So anyway, you can do it through TradingView. Thank you, Fantastico. Next one is Trader Hooper, and quite a few comments or replies to this one as well. So another thing I'm going to mention is a lot of these comments I have chosen because they have received a few likes or a few thumbs up. So if you do like a comment someone else has written down and you want me to answer that, all you have to do is do a thumbs up, and there's a greater chance I actually might reply to that particular comment or answer the question. So Trader Hooper, Orthocell up just over 10% today as we get closer to FDA decision due end of March, early April. High risk event, of course, but should keep the interest up in this stock for the next week or so. Dev Shaw, I was planning to buy more Orthocell, didn't know about the FDA due in near term. Then Trader Hooper responded, and a few times. So back and forth between Trader Hooper and Dev Shaw. So I was trading Orthocell. I've taken profits, and this is what I usually do when there is FDA decision. Sometimes what I've done in the past is I've taken a little bit of profit and kept some on. I did that with Neuron Pharmaceuticals. And the whole reason is I'm just protecting my capital because this is a high-risk event. Yeah, it is a high-risk event. And there is a chance, there's just a chance that the FDA decision will be unfavorable. We saw Mesoblast go through this a lot. So what I usually do in these sort of situations is I take profits off the table, and then if the decision is favorable, I will possibly buy the next day or on that day, and there is a chance the share price will keep on going up. Maybe not all that much, but there is that chance. So this could be a game changer for Orthocell when they do get this decision. Now, if it's a bad decision, not necessarily a game changer to the negative, because I think eventually they probably will get good news eventually. I just don't know. But so the way I trade or look at these situations is I usually have a little bit on the table, but I do take profits. And then if it's a good decision, I possibly will buy back in or add to my position. So Orthocell's chart has been looking great. We'll go back to the daily chart. A nice little pullback, share price on a little bit of a turn, really good volume coming in since about October. Share price has really broken out at that point. So really broke out about September. Share price has increased a fair bit over a short period of time. So there will be profit taken in these sort of situations. But the main thing I'm looking at here is the really good volume coming through. And the next thing I just want to see is the FDA decision. So I'm willing to take profits with this one. And then I might trade Orthocell again if it's a good decision. If it's not, share price might fall 40%. I don't know. Could fall a fair bit. So in these sort of situations, I'm all about protecting my capital. That's the main decision. And then it's about growing my capital. So when I do see a high risk event that Orthocell is facing, I'm more likely to protect my capital than do anything else. So yeah, so still a fan of the company, but I'll be more of a fan if they do get that FDA approval. Next question is from Lockie4809. Thank you for another great video, Kneppy. Can you talk again on how you think Meeka Metals is looking, when you would take profit, and what you think it could get to? And there was a reply from Yaki Toriotaku. I'm pretty sure that is a Japanese name. Interested in this as well. Should be a good tick up after August reports, but with the gold prices on the rise, I think this may be a longer trade than I was originally thinking. Okay, so I am trading Meeka Metals. This is one of my gold trades at this point in time. I should also mention that I believe mining companies are just trades. Now, just because they're a trade doesn't mean I'm going to own it for a short period of time. This could be a long-term trade. This could be a 1, 2, 3, 5-year trade. Now, if it's a 5-year trade, more than likely the returns in Meeka Metals would be significant. So hopefully this is a 5-year trade for me, but I don't think, in my opinion, it's not a long-term trade. For instance, Northern Star, a great trade back in 2012, and that was a long-term trade. And more than likely, if I was trading it back then, I probably would have eventually sold out or taken a bit of profits. But if you go have a look at Northern Star chart back in, I think it was 2012. Maybe a little bit earlier than that, 2010. This company was really, really small. They made an acquisition. They bought a mine. I forget the whole story, but they did buy a mine that was sold by a big mining company. And that was a really good acquisition. And because of that, I've always taken more notice when small mining companies acquire a mine sold by a bigger mining company, because the bigger mining company goes, well, there's not much value for us with this mine, but that could add a lot of value to the smaller mining company. So whenever I see a small mining company make an acquisition, I do take a little bit of notice. So it was Northern Star. Share price broke out in 2010, and the share price at that point was 2 cents. And that was a longer-term trade. But during that period, you can see share price was up and down a lot. But over time, share price rallied a lot. In fact, share price went from 2 cents to a high of $15, maybe. Oh, no, it's up to $18 now. So 2 cents to $18. Imagine if you held or bought some shares in 2010. So over the last 15 years, you've made a lot of money if you haven't sold your shares. Anyway, so let's have a look at Meeka Metals. So one of the reasons why I like this one is my original catalyst for buying shares in Meeka Metals was a drilling result. And then I had a closer look at the company and I went, oh, they're close to production. I like that. So that's why I originally bought some shares. And the share price, when they did release their drilling results, I think it was on the 8th of January. I should put in when I bought. I have this orange line. That's the share price I would sell out if the share price fell below that for an extended period. But at this point in time, I bought at 9.4 cents. So current share price is 14 cents. So I'm up almost 50% on this. But at this point in time, there's no reason to even be thinking about selling Meeka Metals. Gold prices are up. Meeka Metals chart looks absolutely stunning. One of the many stunning gold charts we see on the ASX. So I have no price target. To me, whenever I'm in a trade like this, I don't have a target. I think you pigeonhole yourself, if that's the word, pigeonhole. I'm going to see if I use that in the right context. Pigeonhole, unfairly classifying someone or something to a limited category. Sort of. I don't know if I'm using the right context. But I think if you do have a price target, you're restricting yourself for maximum gains, because say I had a price target for Meeka Metals of 12 cents, I probably would have sold out, and the share price keeps on rallying. They haven't got a signal to sell just yet with Meeka Metals. Now, sometimes that can work out. You might sell ahead before the share price drops, but I think you're going to limit your potential gains, because the whole point of me trading is to ride my winners as long as possible, because you can get 1,000% gains, 10,000% gains if you do that. If you just take profits after 20% gain, you're not going to make a lot of money at all. You don't make money doing that. So you want to ride your winners as long as possible. And some might even say, I think Just James Dean might say, that you want to add to your winners, not only ride your winners, you want to add to your winners and not take profit. So at this point in time, Meeka Metals I am trading Meeka Metals, and I have no thoughts about selling this one at all. And they're also going to production. Now, because they're going to production, that could disappoint the market. Maybe the first financial numbers coming from the company really disappoints the market, and maybe that would be the catalyst for selling. So I won't take profits yet. So what I typically do, I will eventually raise this to maybe 11 cents. In fact, I might do it just now. I'll raise it to 11 cents, and then my next raise, I'll raise it to 12 cents. So I keep raising my sell price. So if I do raise it to 11 cents, more than likely, when I sell this, this will be a profitable trade, because I bought at 9.4, I'm selling it at 11 if I sell. Okay, let's move on to the next one. Bill Walton, 4571. Ooh, I've missed a question here, I think. Yes, there is one. Thankfully, I've written all the questions down, and there is one question I've missed out. But this could be a standalone video. It was written by Yaki Toro in regards to BetaShares AQLT. So I'll get to that after I finish recording. So for some reason, the way I'm doing things has not worked. Maybe I didn't like that particular comment or heart it. You might notice that I've hearted all these comments, and if I filter all the comments that I've responded to, it filters just the ones I've hearted. So that way I don't have to, troll through all the comments looking for the ones I want to talk about. Anyway, so Bill Walton mentioned, I always blow up my personal account trying to get rich quick on penny stocks. However, my self-invest super is up 26% financially to date because trading is restricted to only about 90 of the top ASX stocks and a few ETFs, including gold and silver, which have gotten me the bulk of my gains, and they are set to keep on rising. And I think this is something a lot of investors want to do. They want to get rich quick. And a way to do that is penny stocks. Penny stocks are mostly story stocks. They have a story. A lot of people fall for that story. We have seen that time and time again, and it's going to happen time and time again in the future. Some people will become rich by buying, say, a really small company, but I'd say the majority of people who do this will lose most of their money. I've heard from like a colleague at work saying, I can't believe you're investing in the stock market, you're going to lose all your money. I was like, what are you talking about? And this person said, I had a friend who lost all the money in the stock market. And I was thinking, well, the most likely reason they lost all the money is because they put all their money into like a penny stock and it went bankrupt. So there's a lot of misinformation when it comes to the stock market. A lot of people put a lot of money into penny stocks on the hope, and again, hope is not an investing strategy, that they will get them rich. And occasionally we hear stories, oh, this person became rich. Twiggy Forrest bought some Fortescue shares, he became awfully rich. But I have noticed that most of the times it does not work. I don't mind trading penny stocks, but I'm even now trying to stay away from trading penny stocks because they're just too volatile for me. And I do prefer trading more of the non-penny stocks. Now, I will buy smaller companies, but I do have a set of rules about what sort of penny stocks I will buy. And those are penny stocks that are selling something. They have rising revenue receipts, are either profitable or on the cusp of profitability. And that's my main few rules. But I need that growth in revenue receipts. I need to see the company about to reach that inflection point of becoming profitable. I do prefer companies that are profitable, but I need to see growth. Anyway, so yeah, I used to really like penny stocks. And even now, when I do see a really good story stock, a really good presentation, I will have a quick look at it and go, wow, this sounds really interesting and intriguing. But just because something sounds really interesting and intriguing and it might work, it could be the greatest invention in human history. Just because that might be true doesn't mean it's going to work. Doesn't mean the business model is going to work. And that's the awful truth, that just because something might look and sound really great doesn't necessarily mean it's going to catch on. And that's the trouble with a lot of penny stocks. They sound really good, but it's tough to succeed in this game. Anyway, so I've definitely found, someone sent me a message. Okay, so I'll look at the message after I finish recording. Anyway, so that's really all I've got to say about that. Yeah, just be aware of story stocks. It's more of marketing and that sort of thing. Just James Dean says, what's a good website or app for share price alert? My broker doesn't offer this. I actually used to, in fact, this is when CommSec would have been good if it was up. I actually did have alerts through CommSec. No longer do I have alerts. And I think the reason behind why I don't really need alerts anymore is because I do have a look at most charts that I want to have a look at, that I'm focused on or keen on. I have a look at these charts at the end of every single trading day. It takes me like 5 minutes to go through these charts. So I don't really need alerts for that sort of thing. So I know CommSec used to have alerts. Not sure they still do. I don't know if Superhero or Self-Worth have alerts. I'd be shocked if they don't. I'll be honest with you. I'll be shocked if they don't. Let's just Google price alerts, Self-Wealth. Launches free live pricing tool accounts. There you go. Self-Wealth offers price alerts, this is from AI, allowing to receive push notifications for significant price changes in your favorite stocks. There you go. What about Superhero? Maybe, I don't know. There we go. Superhero offers price alerts, email or mobile notifications. And I'm pretty sure CommSec would still have it. I don't know why CommSec would get rid of price alerts. There we go. CommSec alerts get unlimited free alerts whenever, so unlimited free alerts. Manage alerts on your computer, iPad, or smartphone via the CommSec app. Choose how to receive your alerts via email or mobile push. There you go. So there's a lot of different platforms that allow alerts. So I'm not sure what platform you have, but or broker, but there you go. And by the way, look, I don't trade through CommSec, but I could still make use of their alerts. So you don't have to trade through one of the platforms to actually get alerts. Although maybe that's wrong because I do have a margin loan with CommSec. I just don't use it. So maybe I have more, I can use their alerts when maybe you can't. I have no idea. Trash boat. The market is struggling to get above the waterline on the few up days we are having and looks weak. I'll be honest with you, I had that line of thinking as well. On the strong days, well, on the days where the ASX should have been quite strong, it was weaker than I expected. And I thought, is not a good sign. Now, I fully expected a bounce. Not sure how long this bounce is going to last. It could be a week-long bounce, 2 weeks, 3 weeks, 4 weeks. We have seen bounces in the past during bear markets that last 2 or 3 months. So this could be a long-term bounce. But so far, it's been fairly weak. I'm surprised how weak it's been. Anyway, it would not take much now to trigger another 10% drop, in my opinion, and that will be a hard landing. It's definitely not off the table. Okay, so this is in reply to June Bean Lee's mention that a hard landing is now off the table. Now, I did not listen to this. June, what's her name? How do you spell her name? June B. Lou, I don't know. Hard landing off table. It was it was this one here. 2 stocks for the bottom draw, and the only realistic scenarios left in 2025. She just mentioned here, hard landing is now off the table. Yeah, at the start of 2025, there were 3 picture scenarios facing investors: a hard landing, a soft landing, no landing at all. Just 2 of these scenarios remain, with the hard landing now off the table. I just could not read this or listen to this podcast anymore when I saw that. But maybe she does have a good reason. And maybe it's not her reason, maybe it's who she works for. Despite this backdrop, 10Cap's house view is that a hard landing remains off the table. Okay, so maybe it was never on the table. And the soft or no landing outcomes, which were consensus views long ago, are the only realistic scenarios remaining. So there is a chance, a big chance, they're going to be shocked, because I think there's a much greater chance that a hard landing will occur. I don't think it's an absolute, but it's much larger now than it was before. I might go through this just to see what their argument is. Maybe they have a really solid argument, but I just think that a lot of these brokers would be a little bit more optimistic than they should be. And that is the sense I am getting. And I think if we do see a much harder landing, that they're going to find it difficult, just because it's probably beneficial for them to remain optimistic, not pessimistic. And I think it's beneficial for them to sort of portray that optimism to their clients, which makes sense because they don't want their clients to be selling, do they? Or getting out. Oh, yeah. Anyway, so thank you for that trash boat. And it will not might touch. All it's going to take is to Trump double down on tariffs, and that will lead to another 10% drop. Maybe some bad inflation numbers coming out, increasing inflation, decrease or increasing unemployment, GDP numbers starting to go down. It won't take much for the next drop, big drop. So it won't take much at all. Kevin Doyle says, 4191, I note increased volume in CTB and WBC. Is this something to take notice of? Well, it depends. Depends if it's a one-off or if it's sort of a trend, a longer term, maybe not a longer term trend, but for instance, if you have a look at, just Meeka Metals here, you can notice a really nice increasing volume from about July last year, then a peak in volume in November, and that sort of volume has remained. That's what I'd like to see. The other good example was Orthocell. So this was increase in volume in September, October, and that increased volume has been sustained. That's a good sign. So all depends on context. All depends on context. Oh, I've got another comment that I've missed, and this is from Rick Thillian about Woolies. Oh, no, there it is. There it is. Okay, so let's have a look at CTB and WBC. Isn't WBC Westpac? No, that can't be Westpac. Oh, I don't know. I forget now. Let's have a look at these. WBC. It is Westpac. Okay, so yeah, it's a one-off. It's a Friday. I've noticed large volume on Fridays could have something to do with options or something. Large volume Fridays, options, ASX. So options expiring or something. The expiry date for a share options is usually Thursday before the last business Friday of the expiry month. So it could have something to do with that. I have heard this. I've heard this a couple of times in the past 15 years, that sometimes you will see large volume on a Friday because of expiry in options. So maybe that's why. So that's Westpac. Maybe ANZ. So if all the banks have large volume on the Friday, so pretty big volume with ANZ. What about NAB? Some big volume coming through, but not unusually so. What about CBA? Yes, some big volume did come through for CBA as well. So all the banks had pretty big volume coming through on the Friday. By the way, CBA just had a moving average crossover. That's interesting in itself. That's actually a negative sign. So there might be something to do with that. I don't know. Haven't really done research on it. I've just heard it in the grapevine, maybe 2 or 3 times in the past 10 or 15 years. So that could be true. I don't know. So if someone does know, I'd love to hear about it. The other one was, what was it? The other one was, why did it go all the way down there? CTB. I don't know this one. CTB. CTB. And there's nothing on the ASX. CTB. CTB. Let's see if CTB's in. No, there's nothing in market index either. So that could be, well, why did it change again? Stop changing, stupid YouTube studio. CTB. Let's try to guess what CTB is. So Westpac, CTB. CTB, I don't know. No idea. So let's move on to Rick Thillian. So I thought I had missed this one, but I just put it in the wrong order on my sheet of paper here. Rick Thillian. I did say in a comment recently, Woolworths oversold. Yeah, I'd say you're probably true. Woolworths was oversold at one point. Let's have a look. Yeah, I think, well, I don't know. Let's have a look at RSI. It was close to being oversold. If it wasn't, yeah, it was slightly oversold. Yeah, I think it was definitely oversold, 17th of March, so in the last week, definitely. Share price did fall a fair bit. So it was due for a bounce anyway. So, yeah. Look, it changed again. Why does it do this? It's annoying. It's annoying, YouTube studio. Fruit shops aren't much cheaper for fruit. Well, good quality fruit compared to Harris Farms and other fruit shops. In my opinion, this was a witch hunt against Woolworths, Coles, and the other ones, supermarkets. I think it was a stupid witch hunt. I think it was an unnecessary witch hunt. I don't think their margins haven't increased all that much. Some might say they do have the largest margins in the supermarkets worldwide, but that's because we have less competition. That is a truth, but the margins aren't that great. So sometimes I do complain about how much they're selling stuff at Woolworths, but that's because they have to really to maintain their margins. And I'll be honest with you, you can find really good specials. They always have specials at Woolworths, Coles, Aldi, maybe not Aldi, at Super IGA, whatever it's called. And you can buy stuff you need for half price if you know how to shop. That's all I'm going to say when it comes to that. When it comes to fruit, I don't know about quality, where to find the best quality fruit. All I do know is when I was fruit picking in Griffith, back with my cousin AJ. I forget what year that was. That would have been 1995, 4. Eating orange off the tree was the most beautiful thing ever. Eating the fresh oranges off the tree. There is nothing like eating fruit straight off the tree. That's what I discovered from fruit picking. Didn't get much money, but that's okay. It was an experience. Supermarkets are already giving you volume in grams of liquid volume on shelf tickets. Snow is trucked away in New York. Cars must move or towed away. Don't forget, New York is big. I'm not talking about New York. So I lived in upstate New York, and I had a friend coming over to New York City, and I said, why don't you just come down for the day? And I just said to him, you do know New York City is 6-hour drive from where I live, so I can't really come down for the day. So I lived in upstate New York. Let's have a look. New York State. Actually, let's have a look. I lived in a little town called Brockport, New York, to New York City. How long of a drive? I said 6 hours. Yeah, 5 hours, 41 minutes. So 352 miles. So we're talking about, what's that? So 300 miles is 480 kilometers. So 50 is 80. So we're talking about over 500 kilometers just driving one way. Yeah, so it's a long drive. Yeah, by the way, this is where I lived. I'll show you where I lived. Oh, wait. Opening maps. Yeah, so people don't understand that New York State is big. It's not small, it's big. And where I live, just south of Lake Ontario, just to the east of or west of Rochester, University at Brockport, it was a long drive. We used to get lots and lots of snow. And why did we get lots and lots of snow in this area? Because of a thing called lake effect snow. Lake effect snow, one of the most amazing lake effect snow, one of the most amazing things on planet Earth. Lake effect snow occurs when cold air, often originating from Canada, is blown across the open waters of the Great Lakes. Sometimes you'll see, like, buffalo get inundated with snow, like 2 or 3 feet of snow, and a location maybe 5 kilometers to the north or south of where the snow is falling could be snow-free. So it usually happens in bands. So you get a lot of snow falling in the one band. Yeah, so it's an amazing thing. I have heard lake effect snow produce thunder. Yes, lake effect snow. I never heard of lake effect snow before I moved there. You also have on the northern side of Japan. So if you have a look at Japan, so some of the snowiest places in the world, what's it called, Narita? No, Nagata. So on the sort of the western coast of Japan, these are very snowy places as well. The reason is because the snow air, the very cold air is coming across the Sea of Japan. By the way, I got in trouble once. I worked in Japan, and I called the Sea of Japan to Korean Airlines. They did not like that. A lot of tension. We know this. A lot of tension between Japan, Korea, and China. And some of my clients were Korean Airlines, Chinese Airlines, Japanese Airlines. So you have to be very sensitive to the different cultures. So calling Sea of Japan was not liked by Korea. Anyway, so you have this really cold air from Mongolia or Siberia coming across the Sea of Japan, and you get a lot of snow being dropped on that western side of Japan. So Nagata, very snowy, that place. I know that because my ex-partner, her mother actually came from Nagata. And I just said to her, lots of snow there, and snow. Nagata is one of the heaviest snowfall areas in Japan. There you go. Did Japan get 47 inches of snow? Yeah, it can. 4 feet of snow in just 12 hours. Obihoro. Let's have a look where Obihoro is. I'd say it's on that sort of west coast. I'm just guessing. I could be completely wrong, but oh no, it's not Kyoto. That's completely different. Okay, that's it for weather for today. Lake effect snow. One of my favorite weather phenomena. Yeah, probably just after tornadoes. Tornadoes is awesome. Thank you, Rick Thellion, for that. Next on the list, we have Sensei 6011, who says, oh, yeah, okay, correcting me. I thought Wilson's because in that article, they just mentioned Wilson's. And for some reason, I just thought it was Wilson Asset Management. But Sensei has corrected me, which is good. Good. I make mistakes. We all make mistakes. And the whole point of making mistakes is to learn. So Wilson's is Wilson's Advisory. I had no idea because I don't really follow. I knew Wilson's Asset Management existed. Wilson's Advisory. So I'm going to assume, which can be a bad thing to do, that Sensei is right, that Wilson's is Wilson's Advisory, mainly Queensland-based offices throughout Queensland, Sydney and Melbourne. The one you mentioned, Wilson Asset Management, is a totally different company, I think, and it's not Wilson's in article. That could be absolutely true. But again, if I do make a mistake, I'd love to hear, because this sort of area, like brokers and whatever you call these, advisory companies, I don't know a lot about them. Global, looks like I missed another one. From Forest Hill. Global Wanderer Bruce T6267. Hi Kneppy, I enjoy your videos, although I don't always have time to watch them daily. I mentioned EBR when discussing what was about the stock picks for 2025 a couple of months ago, and since then it's had a quiet time, but now it's starting to power ahead. Today hit all-time high of $1.99 at the close after briefly touching 201. Any thoughts on the chart and whether you think it can move higher? So let's have a look at EBR. I think it's EBR Systems. Now this question was only about the chart, so only look at the chart. Won't have a look at the company itself. And, well, what can you say? The chart looks pretty stunning. I'm just going to get rid of RSI. Yes, for some reason, share price really took off. Oh, start of January. I'd say there was a breakout at that point. Nice breakout. There it is. Look at that breakout. Put a line there. Beautiful breakout on that particular day, 3rd of January. Share price rallied 24.1%. And share price just keeps on going higher. You can see the price action, even the volume action, looks really good. Nice little surge in price. Share price pullback. We've just seen another surge. What you could do here is just wait for another pullback maybe. Share price is above the moving averages. And one thing to notice is sometimes if you do see the share price well above the moving averages, it's primed for a pullback. It doesn't necessarily mean it's going to pull back straight away. It could keep on going higher, but eventually the share price more than likely will pull back. I do like this chart. And of course, the other thing is to pay attention to volume. We started to see the volume increase in September, but we didn't see really an increase in share price. So it's taken a while for the share price to respond. And when the share price did break out, we did see a subtle increase in volume. And the other thing to notice, when the share price pulled back, you can see a noticeable decrease in volume. And then with the share price taken off, increase in volume. Exactly what you want to see. Pullbacks, decrease in volume. When the share price starts to go higher, you want to see increase in volume. You don't want to see the opposite. That would be a bad sign. Anyway, thank you. Global Wanderer Bruce. Do you wander around the world? Where are you now, Bruce? Global Wanderer Bruce. Solcar says, can you please provide views on Southern Cross Electrical Engineering and Collins Food? Well, lo and behold, I'm trading both of these companies. One of these trades look a little bit dodgy right now, Southern Cross. The other trade looks okay right now. So let's have a look at this. By the way, so generally over the past 4 weeks, I have been a net seller, but I have made a few acquisitions. Collins Food is one of them. The other one was Pioneer Credit, just because the share price had pulled back. And I was thinking the market has overreacted based off one shareholder selling. So I thought maybe that's prime for a rally. So we'll wait and see. But let's have a look at both of these charts. Southern Cross Electrical and Engineering released really good results. I thought the share price was primed for a breakout. Unfortunately, the share price didn't really break out. After that, share price has pulled back because of overall weakness in the market. Share price did fall below my sell price at $1.50 for a period of time, for a short period of time. This is why I don't put in stop losses. So a lot of times when I see the share price fall below my stop loss, I just want to remain a little bit patient, just to see if it remains below it for an extended period. So it's maybe a week or so. And then the share price in the last 2 trading days has, I wouldn't say broken out, but it has rallied a little bit on pretty good volume. So maybe this little pullback is a buying opportunity. But to be honest with you, not the best looking chart now because the share price has pulled back from that potential breakout. I need to see the share price get above $1.88 because right there is a nice resistance level for this company. So Southern Cross, possible sell if I don't see share price gaining traction. Collins Food released, what did they release? I forget what they released, but there was definitely seen a shift in sentiment and the trend in the share price. And again, another company with really big volume coming in on Friday. This one can gain, I think, has a possibility to gain traction from here. Whatever they release, it was something positive. It was a good trading update or something. And I had a look at it and went, ooh, it's pretty good. And maybe this is a nice little trade. It's also, they sell chicken. Nice chicken, well, depending on your view. And this is a sort of thing in tough times. I don't think people will pare back going to KFC. Maybe more people will go to KFC because it's a little bit cheaper. Anyway, so this chart actually looks pretty good. I have my sell price at about 780, 790. So share price is well above that. And the chart looks pretty good. The other thing I'd just put in note is right there, I'd love to see the share price get above that dashed line. That would mean if it does get above that dashed line, we'll be seeing or talking about share price at about a 6-month high. Okay, so thank you for that, Mo M Soccer. So there was 2 comments that for some reason I forgot to heart. The most recent one was from Forest Hill. See if I can find it. Yeah, I did not heart this one. There we go. So thanks, Kneppy. I always wonder about TAM, SAM. So the other Yaki, actually, what I can do with the other one, I can just search for it. So Forest Hill says, thanks, Kneppy. I always wonder about the TAM, SAM for companies like Xero, Car Group, REA, given the relatively small size of our economy. Can they really grow a lot from here? Okay, so that's a valid, I think a very, very valid, reasonable, rational question. Okay, so here's a reason I like a few of these companies. Well, actually all 3. They are expanding overseas. So if they wouldn't be expanding overseas, I would not like these companies nowhere near as much. So Xero, their prime goal, well, I would say their prime goal for the next 10 years is to significantly expand into the United States. They're definitely expanding into UK, I believe, if I remember correctly. But definitely, in fact, we can Xero. We can actually have a look at all these. Xero, especially, let's just say expanding overseas. Let's just do that for all 3 companies. Let's see what AI says. Global, or Xero, is a global small business platform actively expanding its international presence, particularly in the UK and North America. I would say particularly in the UK, maybe not as much in North America. I don't know. There's a little bit more competition in North America, but definitely in UK, and I could be wrong. So they are expanding overseas. But if they weren't, I wouldn't be as interested in Xero. What about Car Group? Let's have a look at Car Group. Expanding overseas. They are expanding overseas. Expanding its global reach through strategic acquisitions, focusing on key markets in like Latin America and North America. So I don't own Car Group, so I don't know as much about their expansion plans, but they're definitely, every time I've looked at them, they are talking about expanding overseas. The other one is REA Group, and they're definitely expanding overseas. So I'm very excited about their potential to expand into India. So they'll mention India here. Or maybe not. Here we go, India, yeah. So they're expanding into India, and I'm keeping a very close eye on India. They're also expanding around the world, like North America. They do have a 20% holding in Move. So all 3 of these companies are expanding overseas. Now, will they be successful is the big question. That's a massive question. If they weren't expanding overseas, I'd probably have much less interest in all 3 companies. If they are successful in expansion plans, these companies are small. These companies can become much bigger, huge. The total addressable market is huge if they are successful expanding overseas. That's a big question. Can they be successful? And the other one was about AQLT. Yeah, I did not heart this one as Peter. Okay, there you go. So Yakitori Kaku I was hoping you could do a video on beta shares AQLT, Very Telstra, CBA, Wesfarmers, Heavy. I have no idea what this one is. AQLT beta shares, AQLT beta ETF. Oh, Australian quality. I am going to do a standalone video on this. Because Australian quality, and if you are right, not saying I'm wrong, and it's very Telstra, CBA, Wesfarmers Heavy, particularly Telstra, I do have concerns about their definition of quality. I would not define Telstra as quality at all. So, yeah, I'm going to have a look at this Australian quality ETF, AQLT. So thank you for that suggestion, Yaki and Yakinotonataku. So I'll do a standalone video on that company. So thank you for that. Okay, that's all I have for this particular video. Oh, just shy of 1 hour. If you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I'm not a financial advisor. If you need financial advice, make sure you seek out someone who's qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.